Happy Halloween, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Monday, October 31st, 2022. Got a big week of important policy updates. We got the Treasury quarterly refunding announcement today and tomorrow, and then we got the Fed obviously on Wednesday. So buckle up. Might get some pretty important developments as it relates to net liquidity. Could be positive, unlikely to be, in our opinion, but we shall see. So just starting with our economic release spotlight, we got another bevy of economic data out of the global economy, focusing on Europe, China, and Japan. So we continue to see European inflation surprise to the upside. We had the headline CPI, flash PMI, or flash CPI for the month of October accelerate 70 basis points to 10.7%. That's an all-time high. We had the core CPI for the Eurozone accelerate 20 basis points to 5%. That's also an all-time high. Remember, the ECB officially has a singular mandate to sort of maintain 2% inflation. It obviously has the price stability mandate, the financial stability mandate as well as it relates to European spreads. And that's really creating sort of a challenge for the ECB as it relates to being able to really defend its currency and really bring down inflation. We saw some pretty dovish commentary out of Lagarde on last Thursday at the ECB meeting. And then shifting gears to China, continue to see just signs of liquidity. It's just they're tightening liquidity to defend the renminbi, while they're also in a liquidity trap from a secular standpoint. And then you layer on the fact that zero COVID continues to be an issue weighing on growth broadly. It's just an awful policy mix there. You just getting the official manufacturing data, official PMI data for the month of October. Manufacturing ticked down 0.9 points to 49.2. That's the lowest we've seen in 3 months. And then the services ticked down 1.9 points to 48.7. That's the lowest we've seen in 5 months. So these are really rancid numbers showing that the Chinese economy continues to contract at the margins. And then lastly, Japan. That's been a great, we've been talking about this all Japan for most of the year, saying, hey, look, if you're a long-only mutual fund style investor, international capital allocator, Japan is certainly one of those places, particularly within the developed market space, that you could park funds in as a sort of relative performance basis relative to the rest of the available menu. And that continues to be supported by Japan's growth. Obviously, Japan's policy has been very supportive for stocks, but certainly the growth there has been quite supportive as well. So for the month of September, we had Japanese industrial production accelerate 400 basis points to 9.8% year over year. That's the fastest rate we've seen since July of 2021. And then retail sales accelerate 40 basis points to 4.5% year over year in September. That's the highest we've seen since May of 21. So divergence is all around. Big divergence in European inflation relative to a place like China. Big divergence in Japanese growth relative to a place like China. And all these things kind of support our legacy views, which is we're going to continue to see Europe, the European inflation dynamics, continue to create problems for sovereign bond markets globally, just given the size and levels of those yields relative to the rest of the world. We're going to continue to see weakness in the Japanese yen on a trending basis. And then it's very likely that we're going to continue to see weakness on Chinese assets broadly relative to the rest of the world and on an absolute basis as well. So those are three of the core themes we've had from an international standpoint that have helped investors, sort of make and save money throughout the year that we see not changing based on the latest data. Getting into my longbow dashboard, starting with the kind of global macro rundown here, just looking at the setup heading into the week. So the dollar is still bullish from a medium-term perspective, bearish from a short-term perspective, right in the middle of the range there. So really not much to do. This is kind of the, at least over the next couple of days, we want to see how global currency markets react to the, the updated guidance out of the Treasury Department as it relates to bill issuance, coupon issuance as well. And then also the updated guidance out of the FOMC. Are they really throttling down? Are we on the precipice of a pivot? We obviously do not think so, but clearly markets are really debating that at the current juncture, and they're welcome to. Gold, that is still bearish in the middle, getting towards the lower boundary of the range there, not quite. 10-year, that is still bullish in the middle of the range. S&P 500, that is neutral from a medium-term perspective now, and actually bullish from a short-term perspective. So that's a new signal here in the dashboard here. S&P's got about upside to 39.77. We're around 39.19 at the current juncture. So not much upside here. So a lot of good stuff has to happen to support this sort of nearly overbought market setup here. And then VIX obviously has a very similar setup to the S&P's neutral from a medium-term perspective, but inversely bearish from a short-term perspective, and then getting close to the lower boundary there. You got about a downside to 24.61 in terms of the volatility. If we see any sort of volatility compression born out of these policy catalysts, that's where you would start to think about taking off some risk on the long side or putting more risk on the short side at that particular juncture. NASDAQ, bearish there, medium-term perspective. That's getting towards overbought. Same thing with the Russell, which also is neutral from medium-term perspective. Bitcoin, that's still bearish. Both Bitcoin and Ethereum are bearish medium-term, but bullish short-term. Have some bullish short-term price momentum, not quite overbought yet. Bitcoin, you got upside to around 20,683. Ethereum got upside to around 1,562 or 563. Shanghai Composite, that's still bearish, double bearish, and getting towards the lower boundary of the range there. So not much to do there. Crude oil bearish, still in the middle of the range. Ag bearish, still in the middle of the range there. And then lastly, industrial metals, that is still bearish medium term, getting towards the lower boundary of the range. And then lastly, sorting my global macro dashboard, about 300 individual factor exposures in this table. What we're trying to do is sort it by the odds column to give you a sense of what's most overbought in global macro at the particular juncture, and then we'll scroll down and figure and kind of give you an indication of what's most oversold, so that you, for those of you who are looking to make some money today, can think about structuring some trades in and around this from a tactical standpoint. But U.S. equities, equity indices are really dominating the kind of what's most overbought here. You got RSP. That's the S&P 500 equal weight index. And it's not quite overbought, so be careful there. I wouldn't chase it today. Again, this is, when you have open the envelope risk, generally speaking, as an investor, and what I mean by open the envelope risk is, there's a catalyst that can go one or two ways. It's quite binary. It's best to sort of reduce risk into those things, particularly when the setup isn't particularly clear, right? The setup is not clear. You're neutral, medium-term perspective, bullish from a short-term perspective, but you're almost overbought. That says do a whole hell of a lot of nothing. This is probably one of those days and weeks where you do better just to sort of kind of understand what the incremental changes from a policy standpoint and how they're going to react, understand what those changes are, and ultimately how they're going to impact asset markets on a medium-term basis. You don't need to be in a hurry to put on a trade every single day. You don't need to be in a hurry to trade every single wiggle in the equity and crypto markets, et cetera, et cetera. What you want to do is make sure you're achieving your medium to longer term investment objectives. And we'll figure out what those investment objectives are and orient your risk management according to that. If your investment objectives are trade every wiggle in the stock market, then definitely this is then good luck with that. You certainly there are people who can try to help you with that, but that's not what we're trying to accomplish here. Anyway, scrolling down to the bottom here. Trying to look at what's most oversold. We actually got Chinese utilities are officially oversold there. So again, I wouldn't be touching China with a 10-foot pole. Deeply oversold. That does not look like a chart you want to be buying the dip in, but to the extent you've been short, definitely be covering that. Corn is nearly oversold as well for those of you. So for those of you who want to play ag, maybe a recovery in ag prices, corn would be a good spot to actually think about that from alongside. It's actually a pretty good setup, bullish from a medium-term standpoint. Neutral, and then oversold. So that's actually a fantastic setup. You don't tend to get that. You got a pretty significant implied volatility premiums across the board in terms of looking at the options curve. So the ag is down there as well, but ag's bearish. So if you're going to be playing ag, corn probably the best bet there. So with that, Darius Dale presenting our macro minute for Monday, October 31st, 2022. Everyone, best of luck out there and have a great week. Cheers.